In the month of June, the US equity market saw its worst rout this year after losing 10% in a week to cross into bear market territory. Meanwhile, Chinese shares are approaching bull market territory after China reaffirmed growth targets and further eased restrictions on tech companies. Find out how S&P and Chinese stock warrants performed in the month of June and how you can use them to trade short-term swings of either direction. Hi, I'm Jamie from Macquarie Warrants, and I'm here to share with you some highlights of the market action last month and how you could have used warrants to capture some of these moves. The S&P 500 plunged into bear market territory after losing more than 12% during the month, with the index falling 23.5% since the start of the year. The plunge was due to recessionary fears, following a much larger than expected US inflationary data, which in turn triggered steeper rate hikes. While the S&P 500 retraced on some of its losses towards the end of the month, the September futures index is down 9% in the month of June. This is as of 5 p.m. close on 30th June in Singapore. Following the spate of worrying news on the US, an investor could have considered buying S&P put warrants, which track the S&P futures in order to hedge further downside risks. This is because put warrants move inversely from the underlying and will increase in price when the underlying stock or index asset falls. Following the 9% decline in the S&P September futures in the month of June, the trending S&P put warrant DEDW generated returns of 55.3% from 11.4 cents to 17.7 cents on 30th of June. Meanwhile, the trending S&P core warrant 9N3W fell by 69.6% from 27 cents to 8.2 cents. However, for an investor who expects an underlying to rise in the short term, they may consider using call warrants to complement their trading strategy. While US shares were entering bear market territory, Chinese shares were given a new lease of life when Chinese President Xi Jinping reiterated China's growth target of 5.5% for the year. Of the Chinese stocks, Sands China, Geely, and Alibaba are amongst the best index performers on the Hang Seng Index in the month of June, with gains of 24.6%, 18.9%, and 16.6% respectively. Macquarie's trending core warrant tracking Sands China was up 117.9% for the month of June, while trending Geely core warrant was up 77.8%, and trending Alibaba core warrant was up 49.5%. The trending put warrants over these names were down between 47% to 77%. Through these highlights, we can see that warrants, which allow investors to go both long or short, can offer investors short-term trading opportunities in both bullish and bearish market conditions. Looking ahead of potential volatility in the month of July, investors may wish to look out for the US June CPI numbers, China's second quarter GDP numbers, which provide an indication of how much more stimulus is needed by China's government in order to hit a 5.5% growth rate for the year. And finally, what will be announced following China's Politburo meeting, which sets the tone for policies in the rest of the year. For further details on trading warrants, and to find out if you're qualified to trade warrants, click on the link in the description or feel free to contact us at our warrant hotline. Lastly, don't miss out on the next video and exciting warrant news by scanning the QR codes and subscribing to our channels on YouTube, Telegram, and Facebook.